very nice weekend, and now just we are here to share our weekend market breakdown, just to see how the market is developing, just preparing for the week ahead. So we are here just to share the overview of how we are looking in the market, on which pairs we have for the next week, the top pairs and the weight cards. So without wasting time, let us dive in directly. So the first pair in the list we have is Kiwi card. Kiwi card is looking good from the high time frame to the lower time frame. So this is daily time frame, and you can find that we have this nice ascending channel over here. Very nice ascending channel. The way it is developing is very nicely, but we had this impulsive break of this structure. Now we are forming this very nice ascending channel also. So this is a very nice pattern that is developing over here, and you can find that we have already seen the pattern completion. So we have the first touch, we have the second touch, and we have the third touch. So we have already completed the pattern from the high time frame. And if we see this in the high time frame, then we are just be aware for the lower time frame to look for the entries. This is a possibility. It has the biggest possibility for dropping down for the next week, but the another scenario, it is looking also to push to the upside. So we will not be wondering if the price just move to the upside to these levels. It is a double top formation. So if we have any pattern extension over here, just forming maybe another pattern to approach to the double top formation, then the probability has even more increased. So we are looking for this scenario in this week, but as I said, this pattern has already completed, so you can see the drop before reaching here. But if it reaches there, then nothing will be wandering. So let us jump to the lower time frame, and this is H1 time frame. Also, as I said, that the pattern has already completed. You can find that we have first touch, have second touch, third touch, as we have seen in the high time frame. So this is a very nice pattern, and let us look how the price approached there. The price has not approached there with a strong momentum, but it was just moving a corrective view, just moving corrective to the top, and now we have reached the top of the structure. But if I'm utilizing a ley line here, I can find that I have this scoop formation, and now the market is catching people in the wrong side of the market. So for me to look for selling potentials in this pair, now what I should see, I have first to see the commitment and then continuation flag over here, then the position will be let to be taken. Otherwise I will wait for the message from the market. If it maybe moves to the upside, forming the continuation, then move higher, then I know that the price is going to the double top formation. So I'll be waiting to see how the market develop. I wait for the message from the market. I will never chase the market. So this is how I look this Kiwi card. Let us jump to the second one, is euro dollar. Euro dollar is looking good. Let us jump first to the high time frame, because as we always say that the high time frame shows us overall movement. It shows us where the price may move, because if the momentum in high time frame is good, then it is very nice now and easier for us to look at the message from the lower time frame. But if we stick in the lower time frame, we'll be ignoring the message from the high time frame, and it will cause us to lose multiple positions. So this is euro dollar, and looking very nice. And you can find that we had the double bottom formation, and we had this descending channel here. The price pushed up very passive, and we had any corrective from the high time frame. So what now I'm waiting for, let me delete this. What I'm waiting for is, I'm waiting for the correction as a continuation pattern to push to the high, to the 9% rule here, before looking for the selling potential. Or otherwise, if I can get any commitment here, then it will be also good. So it is how the market will develop. So let us jump to the lower time frame to see how the price is really looking. So we are going to H1 as normal. Yes, it is good. This is it. The price now has already reached at the double top formation like this. This is a double top formation. Yes, the price was moving to approach this, and it now break this structure. So what we are waiting, or we are looking for two scenarios: either for the price to catch people on the wrong side of the market, then drop, having the commitment, then drop to the downside, or if not, just breaking this ley line, and moving to the upside to complete the 90% rule before it having the drop. So it is how we look with the next one. It is dollar Swiss looking very, very nice. And let us jump to the high time frame. Yes, as I say that we are giving the overview of how the market is really looking. Yes, in the high time frame, we have this developing ascending channel, so we have the probability for this price to complete the pattern, then having the longer term sell. But for this week, what we have these patterns over here to the end of this outer, at the end of this outer structure. Then we have these patterns here. We had this impulsive movement, very, very strong. Now we were forming this continuation pattern over here to push to the upside, as I said. But you can find that at the end of this pattern here, we had this impulse. Now we are forming a very, very big correction. So we are looking for the price to push up first to complete this pattern and drop to this level here, or just reaching to the outer structure before dropping to the downside. So let's look in the lower time frame. This is lower time frame, and the pattern is even more clean. Yes, we have this running channel over here. We have the descending channel at the end of this big correction. So we can find, or we will see, or we ought to see that the price is moving up first to complete this pattern, because we have 1, 2, 3. So the price may move up first to complete the pattern before having the commitment to drop to the downside before the longer term buy. Or if not, here the price may break this structure and moving to the outer structure over here, recessing here, and we'll wait for the commitment. Then after the flag, then the price will have the commitment to push to the downside. So we are looking for this upside movement first before the longer term buy to this outer structure over here. So this is how we look this. Next one is Euro card. Euro card is also good. Let us jump to the daily time frame. Daily time frame is good. Daily time frame is good. We had this double top formation, and we have formed the evening star formation. So we have this impulse. Now we are in a correction phase, the amber zone. Now we are hoping to have another impulsive leg after this correction. So impulse, correction, impulse, simple mechanics of a strategy. Yes, this is the time frame. So let us see in the lower time frame how it will look like. The lower time frame, we can have the shorter term buying potentials. As I said, we had this very, very, very strong impulsive movement, and now we are in the amber zone, forming this big correction over here. And now this is the middle section of this pattern. We are hoping the price to push to the upside, completing this pattern. Then we have the drop to the downside, because impulse, correction, impulse. So it is very, very nice. We are looking for the shorter term buying potential, but the longer term selling potentials. This is Euro card. Euro card. Let us move to the another one. It is QEN. QEN is also looking nicely. So let us see in the high time frame first. The high time frame, we have this expanding formation over here. We have this first, second. So we are waiting for the third touch for this. And guys, don't ignore the message from the structure. Structure is a structure. if you are ignoring the message from the structure, we'll see how the price will kick you out. So we are expecting this price to reach here. We don't know when it will reach there, but it might reach there. See, so we are hoping the price to reach over this to complete this pattern. We had this descending channel, so it is like a middle section of this pattern. So we are looking for the longer term buying potentials there, but the price now is forming the double top formation. Let us look in the lower time frame. The lower time frame, the price has approached the double top formation, double top area. So we are looking for this price to catch people on the wrong side, having a commitment. Then if this happens, then you know that the price may drop to the downside for a while. But as I say, that we will not be wondering if we see the price breaking this ley line and forming a correction over here to push to the upside, because we still have the journey of completing this outer structure. So we can still see the buying potentials, or we can see the price moving to the upside. So if so, then we'll be looking for the entries as the price develops. So we have the journey of completing this expanding formation, the structure. So we are looking for this development. Another one in the list, it is gold. Gold is looking good. Gold is looking good. Gold is looking good. In the high time frame, the price has already approached it at the double top area, and we have these triple touches, 1, 2, 3 touches, and this is a structure reach at the top. So it has reached their structure. So we are looking for the risk entries after the closing of the retracing candle, like 1 hour retracing candle, the evening star formation, and so and so. So in the lower time frame, yes, it is looking also good. We had this ascending formation. This is the middle section of this pattern, 1, 2. So we are looking for the third touch there. Then we'll be looking for the either risk entry, because the price has reached their structure. So we are looking for the risk entries after the closing of a retrace candle over there, or we are looking for the juicy risk entry after the price having the commitment and forming this continuation flag. Then we'll be taking as a juicy risk entry to the downside here. The first TP should be at the 90% rule, as we believe that the price, when it breaks the structure in passive, then it has a probability of reaching to the level where the correction has started. So, and the last one in the list, it is dollar yen. Dollar yen is looking also good. So let's jump to the high time frame. The high time frame. This is high time frame, and it is like it is developing a structure over here. So we had these touches here, and we had this impulsive movement. We were forming this expanding formation in the continuation one. So now we had this impulse, big correction there. So we are looking for another impulse until here to complete this pattern, or dropping until this the double bottom area, forming this big flag, continuation flag. Then we'll be looking for the upside movement. Yes, in the lower time frame, let us first delete these drawings. Yes, we had this very nice patterns over here. Had this impulsive movement. This was a green zone. Now this is the amber zone. We have this very big pattern formation. So impulse, correction, impulse. We are looking for this impulse over there. We are looking for this to develop over here. Very nice one. So the patterns are looking very nice. So we'll be looking for the reduced risk entry after the continuation flag formation over here. So we'll be looking for the Sorry, we'll be looking for the selling potential. Stop loss above the structure. First TP, the low one here at the structural area. So guys, this is just the overview of how the market is looking like for the next week. So in order to know for the wheat cards and these pairs how they develop, where to enter, you have to join our Telegram channel so that we can receive the updates as we send there frequently as the market develop. So thank you for watching this. Have an incredible trading week.